Should you add short-term rental properties to your wealth building strategy for 2024? Hey, it's Chabris with the Chabris Group here in Cincinnati, and today I want to talk about the 3 criteria that you want to run your decision making through if you're evaluating the idea of adding short-term rentals to your investment property and wealth building portfolio in 2024. The first criteria you want to address is money. The reality is that short-term rentals do have the capacity to bring in much more rental income on an annual basis than a traditional long-term rental. There's some caveats there. The first one is that oftentimes that money, that income, can be more seasonal and more variable, so there's a little bit more volatility in how you receive that income versus a traditional long-term rental where it's a fixed amount of income every single month. Now, in the environment that we're in right now, where real estate is relatively expensive and interest rates are relatively high, the short-term rental can be a more compelling option where you're able to earn more income through your rental program. So short-term rentals are definitely something to look at as a growth opportunity. So that's criteria number 1 is money. Number 2 is management. Short-term rentals are much more management intensive. You've got 2 options. You can self-manage, where you're doing things like cleaning, restocking, the leasing, of course, or you can hire a property management company to do all these activities for you. If you hire a management company, usually property management is somewhere between 8 to 10%. Short-term rental management is going to be 20% plus of total rental income because it's a much more management intensive process. So if you like active management and you're okay with active management, you can save a lot of money and make these more profitable. If you're interested in outsourcing it, just know that that management expense is going to be much more expensive than it would be on a traditional long-term rental. The third one is stability. And this is an important one for people that are a little bit more risk averse like myself. Short-term rentals are still relatively new as a wealth building option in the real estate game. And so there are some things that could change, specifically things like taxes on short-term rentals and or zoning or regulatory changes. Some municipalities are still trying to determine how many short-term rentals do they want in a specific area. How do they tax those? Could they limit the number of short-term rentals? These are all questions that are in the air right now, and so there is some question around the long-term stability of short-term rentals. You want to consult, do your research, and just know that they may be a little bit more risky in the long term. If you buy for a short-term rental, one of the things you want to keep in mind is, okay, if I'm forced from a regulatory perspective to switch to a long-term rental, can I at least break even on my investment? So that's it. Which is right for you? Would you like higher money, a little bit higher management, a little bit higher risk, but higher reward? Or are you more traditional in how you want to invest? Or is it a blend of the two? Those are the kinds of questions you want to ask me or your real estate agent of choice as you evaluate the short-term rental for wealth building strategy in 2024.